Good morning, traders and investors. Steve Gans here, and welcome to the weekend update and market review. A little bit later in this video, after I review the market and my expectations of the market, I'm going to share with you a concept options trade to consider as a paper trade going forward. This is all about education and learning. So we're going to review the markets first, and then I'm going to come to you with that trade idea, as well as a link so that you can open that trade yourself here at OptionStrat. You do not need any sort of subscription to do that, and you can play with and monitor the trade yourself. So with that, let's take a look at the SPX, or the S&P 500 indexes. So the S&P continues to grind slowly higher up here. We can see that it's basically going into a little bit of a mini upward channel. So it is making higher highs and higher lows. So that's to the bullish side, but we are also up in a resistance area at around that 6,300. That's an area it's gotten to before and just chopped sideways a little bit. That also happens during the summer months. As we get into the summer months, sometimes things tend to go a little more sideways. There's just a little less overall volume in the market at that point as well. So the S&P, again, is moving slightly higher, but overall I would consider it in a general wide channel up there at those elevated levels. SPY, of course, is going to look exactly the same sort of thing happening there. It is making slightly higher highs, slightly higher lows, but the volume is still a little bit low on that. And it is entirely possible that at some point here in the next week or two that a breakout could happen. And when that happens, of course, I'm expecting probably more of a breakout to the upside. Again, given that we're forming a little bit of an upward trend or an upward wedge at this point. But right now, I'm just more neutral to slightly bullish on the market. The ES, the futures market for the S&P, same picture, of course. Volatility in the S&P 500. It's not at all-time lows, but it's certainly at recent lows. So there's no fear in the market right now. Right now, people are not buying insurance on their portfolios. They feel everything's going along fine. Of course, any major news event can spike that at any time. But right now, volatility is quite low. On the Qs, we're going to see a very similar pattern. We had an overall breakout that occurred back here, and then we've had a more of a pronounced upward trend in the Qs, but again, largely on some lower volume. So it is still moving higher. I'm slightly bullish on the Qs, neutral to bullish. And again, largely expecting a little bit of a sideways chop, maybe a little bit of a drift higher. In volatility on the Qs, same story here, very low volatility, no real fear in the market on the Qs. And then we can take a look at IWM. IWM, as mentioned previously, there was some really significant resistance right in this area, and it's starting to get close to that, but largely trading sideways, and there's pretty significant support here. So IWM, I'm largely expecting to be in a channel in that 215 to 228 range, somewhere along those lines. And then volatility on the IWM, it is slightly elevated, ever so slightly elevated compared to the others. So where does that lead me? If I'm looking at these main indexes and I'm interested in a potential trade idea or concept, again, I stress paper trade for learning, I would consider a Condor on the IWM. Now, the reason I'm considering that is the volatility in the IWM was slightly elevated. It was more elevated than the other two. That means that if I am selling this short strike and I'm selling this short strike, I'm going to get a little more premium for those sales when volatility is a little bit higher. The higher volatility goes, the more premium I'll end up getting on these. And then, of course, I am essentially selling insurance here, and then I am reinsuring or buying insurance at those other locations to basically make sure that I have a defined risk trade. my max loss in this trade, no matter what happens, would be 219. My max profit, if I carried this trade all the way to expiration and it expired under my tent between these two strikes, that max profit's going to be 281. Now, I don't normally carry these all the way to expiration. When they get to about 50% profit or so, that's usually when I will tend to take them off. And or if our market does have a large move, one direction or the other here, it's entirely possible that I may need to adjust this trade. I may need to come in and possibly widen out my tent in certain ways. Or if the market goes down, maybe I can take this short call and I can roll it down closer to pick up additional premium to help reduce the size of that larger loss. There's a whole bunch of things that can be done with potential adjustments. Ultimately, that's where every options trader needs to look to get to, is to understand when and how to make adjustments in their trade so that they can extract the most out of them or manage the losses to a minimum in a trade. But for right now, I am proposing this particular Condor trade. I'm going to go ahead and save this trade. And let's see, I'll put weekend update or 7/20, and then I will copy that link. I'm going to put that link in the description down below for everyone so that you can simply click on that link as well, and it will open up this exact same trade for you. Once you open that trade up, you can play with it yourself. You can go and see, gee, I think I need to allow a wider range, and you can go ahead and contrast and compare different types of trades or different variations on this trade yourself and see how those pan out. This is all part of the educational process. So with that, I'm going to wrap up the weekend market update here. If you like this sort of information, please hit the like and subscribe down below. I greatly appreciate that. Give me any comments as well.